My younger brother Marcus is 31 years old, has a moderate intellectual disability from a birth injury, and has never once in his life been able to read a bank statement. Which is exactly why, 11 months after I noticed something wasn't adding up, I sat across from our stepfather at a mediation table in San Diego, sliding a stack of 41 falsified invoices across the table, and watched a man who had controlled Marcus's entire special needs trust for 6 years finally understand that the woman he thought would never look closely enough had spent the last 11 months doing nothing else. Marcus's trust held $940,000 when our biological father died and established it, specifically so that Marcus would always have care, dignity, and security beyond whatever government assistance he qualified for. By the time I finally got access to the real accounting records, that trust held $211,600 and $70,000 didn't disappear because Marcus needed extraordinary care. It disappeared because the man who was supposed to protect my brother decided, quietly over 6 years, that a disabled man who couldn't read a bank statement was the perfect person to steal from. If you're new here, welcome to Family Hidden Fight, where we tell you the truth about the wars fought behind closed doors, inside families, against the people who can least protect themselves. Today's story is called The Trust That Was Supposed to Protect Him. Let's begin. My name is Diana Acaffer. I'm 36 years old. I work as a registered nurse in San Diego, and my younger brother Marcus is, without question, the most important relationship in my life. Marcus was born with a birth injury that caused moderate intellectual disability. He reads at roughly a 4th grade level, manages basic daily tasks with support, holds a part-time job bagging groceries at a store near his group home that he's genuinely proud of, and has, his entire life, possessed a warmth and directness that I've watched disarm nearly everyone who's ever taken the time to actually know him. He is not, in any meaningful sense, capable of independently managing complex finances, understanding legal documents, or recognizing when someone he trusts is taking advantage of him. He has never needed to develop that particular kind of suspicion, because for most of his life, the people around him made sure he never had to. Our biological father, James Acaffer, died of a sudden cardiac event when I was 22 and Marcus was 17. Young enough that Marcus's future care was still very much an open, urgent question our father had, fortunately, already begun carefully planning for in the years before his death. Working with a special needs planning attorney to establish an irrevocable special needs trust funded with $940,000 from his life insurance policy and a portion of his retirement accounts, structured specifically to supplement, rather than disqualify Marcus from, the government disability benefits, SSI and Medicaid, that provide the foundation of his care. Our mother, Patricia, remarried 4 years after our father's death to a man named Gerald Fitch, an insurance adjuster who our mother met through mutual friends, a relationship that seemed, in its early years, genuinely happy and stable. My mother, navigating grief and the ongoing complexity of coordinating Marcus's care alone, welcomed Gerald's willingness to take an active role in managing the practical logistics of Marcus's life, something I understood at the time as a genuine relief for her, and something I now understand, with considerable pain, created exactly the opening Gerald needed. The special needs trust our father established named a professional trust company as initial trustee, with a provision allowing our mother, as Marcus's primary caregiver and closest family member, to petition to become successor trustee once Marcus turned 25, on the theory that by that point, our family would have a clearer, more settled understanding of Marcus's ongoing needs than a professional trust company managing the account from a distance. Our mother did petition to become successor trustee when Marcus turned 25, 6 years before this story begins, and the transition was approved without significant complication. What none of us fully appreciated at the time was how much practical authority over that transition our mother would come to delegate, almost immediately, to Gerald, not through any formal legal mechanism, since Gerald was never named as a co-trustee or successor trustee in any of the trust's governing documents, but through the ordinary, informal drift of a marriage where one spouse, overwhelmed by the genuine complexity of trust accounting, tax filings, and disability benefit coordination, gradually hands the actual day-to-day management over to the spouse who seems more comfortable with paperwork and numbers. I want to be precise about something here, because it matters enormously to how this story eventually unfolded in court. Gerald was never Marcus's legal trustee. My mother was, and remained, the trust's legally responsible fiduciary throughout the entire period in question. But Gerald, functioning as what amounted to an unofficial, unaccountable co-manager of the trust's finances, with my mother's full trust and essentially no independent oversight, had for 6 years effective control over every dollar that moved in or out of that account. I lived during most of this period about 90 minutes away, working demanding nursing shifts, visiting Marcus regularly but not involved, day to day, in the granular details of trust management, which I understood, reasonably at the time, as my mother's and Gerald's responsibility. I want to be honest, the way I've tried to be honest throughout every part of this story, that some part of the guilt I've carried since discovering what happened involves exactly that distance. The reasonable, unremarkable distance of an adult daughter with her own demanding career, trusting that her mother and stepfather were handling something they'd both, repeatedly, assured her was well in hand. The first thing that caught my attention, roughly 11 months before the mediation in the cold open of this story, was small enough that I almost let it go entirely. Marcus mentioned, during one of our regular Sunday visits, that his group home had recently updated their monthly program fee, and that Gerald had told him the trust couldn't really absorb another increase right now, the way it had in previous years, suggesting Marcus might need to consider a lower-tier care option with a less expensive activities program. This struck me as odd for a specific reason. I had, a few years earlier, briefly reviewed a general summary of the trust's projected long-term funding that our mother had shared with me, in the context of a broader conversation about Marcus's future care planning, and my rough recollection was that a $940,000 trust, conservatively invested and drawn down at a sustainable rate over Marcus's expected lifetime, should have had more than enough capacity to absorb ordinary annual increases in group home fees without any serious strain, particularly this early in what was meant to be a multi-decade funding horizon. I mentioned this, gently, to my mother during a phone call the following week, framing it as genuine curiosity rather than suspicion. Is the trust really running that tight already? That seems fast, given how much Dad put into it. My mother's answer, in retrospect, was the first small crack in a wall I wouldn't fully understand the size of for many more months. Gerald handles all of that, she said. He says the market's been volatile and we've had some larger expenses come up. I honestly don't look at the details that closely, sweetheart. He's very good with that kind of thing. I let it go that week. I want to be honest about that, because I think it's important for anyone watching this to understand that suspicion, in situations like mine, very rarely arrives as a single dramatic realization. It arrives as a small, easily dismissible inconsistency, when you have every reasonable incentive to explain away, because the alternative, that someone your mother trusts completely has been quietly stealing from your disabled brother, is simply too enormous and too painful to seriously entertain on the strength of one slightly odd comment about a group home fee increase. The second thing happened about 3 months later, and it was harder to dismiss. Marcus, during a visit to my apartment, mentioned, with the particular pride he brings to talking about his job, that he'd recently been given more hours at the grocery store, enough that his manager had suggested he might eventually qualify for the store's health benefits program if his hours stayed consistent. He asked me, in his straightforward way, whether that would be good or bad for his other benefits. A genuinely important and reasonable question, since additional earned income can, depending on the specifics, affect SSI eligibility calculations in ways that require careful coordination. I told him I'd look into it and get back to him, and when I called our mother to ask a few clarifying questions about how Marcus's current SSI benefit was being coordinated with the trust's supplemental distributions, a fairly standard, technical question any care coordinator or family member managing a special needs trust should be able to answer without much difficulty. She seemed, for the first time in this entire process, genuinely uncertain in a way that surprised me. "I'd have to ask Gerald," she said. "He handles the SSI coordination piece. Honestly, Diana, I've let him take over most of the financial side of things over the years. It got to be a lot for me, especially after your father's original attorney retired and we switched to whoever Gerald found to help with the annual filings." Whoever Gerald found. I remember that phrase specifically because it was the first moment I understood, with real discomfort, that the original special needs planning attorney my father had carefully selected, a specialist in exactly this kind of trust, someone whose expertise had been central to structuring the trust correctly in the first place, was, at some point in the preceding years, no longer involved, replaced by someone Gerald had selected. For reasons and through a process my mother apparently couldn't fully explain to me, California law requires special needs trusts of this structure to file periodic accountings, formal, detailed reports of the trust's income, expenses, and current balance, typically submitted either to the court overseeing the trust or, depending on the trust's specific structure, made available to interested parties, including adult siblings with a legitimate interest in the beneficiary's welfare. I requested a copy of the trust's most recent annual accounting, framing the request to my mother as something I needed for my own records, in case I ever needed to step into a more active caregiving role for Marcus down the road. A reasonable, unremarkable request that, in a healthy, transparent situation, should have taken my mother or Gerald a matter of days to fulfill. It took 6 weeks, 3 follow-up calls, and eventually a slightly tense conversation with Gerald directly before I received a copy of the accounting, a document that, once I finally sat down with it, immediately raised more questions than it answered. The accounting listed the trust's current balance at $340,000. Down from the roughly $850,000 I calculated the trust should have held, based on my rough understanding of the original $940,000 principal, minus 6 years of reasonable, ordinary distributions for Marcus's actual documented care expenses, plus whatever modest investment growth a conservatively managed trust of that size would typically have generated over that period. The accounting attributed the decline primarily to a category labeled extraordinary care and support expenses, itemized only in broad, vague categories, specialized therapeutic services, enhanced residential support, supplemental medical equipment, with dollar figures attached to each category, but no underlying invoices, receipts, or documentation supporting the specific charges. I called Gerald directly and asked, as plainly as I could manage, for the underlying documentation behind those categories. "Diana, I appreciate you wanting to understand this," he said, in a tone I would later come to recognize once I understood the full pattern as carefully practiced reassurance. But I want you to trust that your mother and I have been managing this very carefully with professional guidance for 6 years now. Pulling together 6 years of detailed receipts is a significant undertaking, and honestly, it feels a little bit like you're questioning whether we've been taking proper care of your brother, which I have to say is hurtful, given everything we've done for him. I recognize that deflection, even in the moment, for what it was, an attempt to make my reasonable request feel like an accusation, designed to make me back off rather than press further. I did not back off. I consulted, that same week, with an elder and disability law attorney in San Diego named Camille Ferreira, who specialized specifically in special needs trust disputes. A fortunately specific enough niche that I found her within a day of searching, through a referral from a colleague at the hospital whose own family had navigated a related, though less severe, dispute over a family trust years earlier. Camille's first piece of advice was direct, and I think essential to understanding how situations like this eventually get uncovered. You need a forensic accountant who specializes in trust and fiduciary fraud, not a general accountant. This kind of fraud typically involves patterns that only become visible when someone systematically reconstructs 6 years of transactions against 6 years of documented, legitimate need. That's not a quick project, and it's not cheap, but based on what you're describing, I think it's necessary. I hired a forensic accountant named Daniel Whitcomb, who had notably testified in several prior California cases involving exactly this category of fraud, trustees and unofficial trust managers exploiting beneficiaries who lack the capacity to independently monitor their own finances. Daniel's engagement began with a formal, legally supported document request through Camille, compelling my mother, as the trust's legal trustee, to produce 6 years of complete banking records, invoices, and supporting documentation for every distribution the trust had made, a request my mother, once she understood the seriousness of what Camille and I were now formally pursuing, complied with, though I could tell, in our conversations during that period, that she was genuinely torn. Caught between her own dawning, painful suspicion about Gerald and a marriage she had built her entire post-widowhood life around. Daniel's forensic review took nearly 4 months to complete, given the volume of transactions involved and the deliberately vague, poorly documented nature of many of the trust's recorded expenses. What he ultimately assembled was a pattern I want to walk you through carefully, because I think its specific mechanics illustrate something important about how fraud against a vulnerable beneficiary, someone who genuinely cannot independently verify what's being spent in their name, tends to actually work. The largest category of misappropriated funds, totaling roughly $310,000 over the 6-year period, involved payments to a company called Cornerstone Residential Support Services, listed in the trust's records as a provider of enhanced residential support and supplemental care coordination for Marcus. Daniel's investigation revealed that Cornerstone Residential Support Services was not, in fact, an independent care provider at all, but a single-member LLC registered by Gerald himself, using a business address that turned out to be a private mailbox rental store roughly 2 miles from Gerald and my mother's house. Marcus's actual group home, the licensed, legitimate residential facility where he had lived for the entire 6-year period, had no record of ever contracting with, receiving referrals from, or coordinating care with any entity called Cornerstone Residential Support Services. When Daniel and Camille's investigator interviewed Marcus's actual group home administrator, she confirmed that Marcus received the same standard level of care as every other resident at that facility, funded through the ordinary, properly documented monthly fees. The trust legitimately paid directly to the group home, fees that were entirely separate from and considerably lower than the additional $310,000 Gerald had directed toward his own shell company under the guise of enhanced support that, as far as Daniel and Camille could determine, was never actually provided. A second category, totaling roughly $185,000, involved a series of specialized therapeutic services, payments made to a physical therapy and wellness practice that, once Daniel investigated further, turned out to have provided genuine services to Marcus, but at a fraction of the billed amount. The practice's own internal billing records, obtained through a subpoena, showed actual services rendered to Marcus totaling approximately $41,000 over the 6-year period, roughly $144,000 less than what the trust's records showed being paid to that same practice. The practice's billing manager, once interviewed, explained that Gerald had, on multiple occasions, requested that invoices be issued for larger amounts than the services actually rendered, framed to her as a way of building in a cushion for Marcus's future care needs. An explanation Daniel noted, dryly, in his report, does not constitute a legitimate basis for issuing fraudulent invoices under any accounting standard. Remaining roughly $175,000 was harder to trace to any single specific mechanism, appearing instead as a pattern of smaller, individually modest transfers, cash withdrawals, transfers to accounts Daniel eventually connected to Gerald's personal finances, and a particularly damning set of payments, totaling $62,000. That had gone directly toward the down payment on a vacation property Gerald and my mother had purchased in Palm Desert roughly 4 years earlier, a property titled solely in Gerald's name, separate from my mother, a detail Camille flagged immediately as significant given what it suggested about Gerald's intentions for that specific asset. I told my mother about Daniel's preliminary findings on a Sunday afternoon, sitting in her kitchen, a conversation I had dreaded for weeks, understanding, even before I began, that whatever came next would likely mean the end of her marriage, regardless of what she ultimately chose to do about it. My mother's reaction unfolded slowly, in stages that Camille had gently prepared me to expect, having seen similar dynamics play out in prior cases involving a spouse who had, whether through willful blindness or genuine deception, been kept largely in the dark about a partner's fraud. First came disbelief, an insistence that there had to be some misunderstanding, some explanation Gerald could provide if only given the chance. Then, as I walked her through the specific documentation, the shell company registered to Gerald's own name, the inflated therapy invoices, the Palm Desert property, came something closer to a slow, visible collapse, the particular grief of watching someone realize, in real time, that a person they built years of their life around had been quietly, systematically stealing from their own son. I trusted him with this because I couldn't bear to keep managing it myself, my mother said, at one point, her voice barely audible. Every time I looked at those account statements, I thought about your father, about how carefully he set this up, about how much responsibility it was to get right for Marcus for the rest of his life. It felt like too much. Gerald made it feel like less. I want to be honest about how hard it was, in that moment, to hold both my own anger that had been building for months, anger at Gerald, but also, if I'm honest, a complicated frustration with my mother for the years of insufficiently questioned trust that had allowed this to happen alongside genuine compassion for a woman who was, in that kitchen, confronting the specific devastation of having unknowingly enabled harm to her own disabled son. Through what I ultimately came to understand as grief-driven exhaustion rather than any deliberate complicity on her part. Need you to help me fix this, I told her. Not because it undoes what happened, but because Marcus needs you, and needs this trust protected, more than he's ever needed anything. You can be part of making that happen, or you can let Gerald's lawyers drag this out for years while you sit on the sidelines. I need to know which one you're choosing." My mother chose, that day, to work with Camille and me rather than protect Gerald, a decision that, while it came with real personal costs to her, became essential to how quickly and effectively we were ultimately able to move. My mother filed for divorce from Gerald within 2 weeks of that kitchen conversation, and, working with Camille, also formally cooperated with a petition to remove herself as trustee. A step Camille recommended not because my mother had knowingly participated in the fraud, but because the 6 years of inadequate oversight had genuinely compromised her ability to serve as an effective, independent fiduciary for Marcus going forward, and because voluntarily stepping aside, replaced by a qualified professional trustee, would both protect Marcus more reliably and strengthen our overall legal position by demonstrating good faith rather than continued resistance to proper oversight. The court appointed a professional fiduciary, a licensed trust company specializing in special needs trust management, as successor trustee, with me granted formal standing, given my role in uncovering the fraud and my ongoing relationship with Marcus, to receive regular accountings and participate in major decisions regarding his care going forward. An arrangement Camille helped structure to ensure that Marcus's trust would never again be managed with the kind of unaccountable, informal authority that had allowed Gerald's fraud to continue undetected for 6 years. Gerald, once served with the divorce filing and the trust fraud allegations, retained his own aggressive attorney and initially pursued a strategy of minimizing and reframing his conduct, arguing that the Cornerstone Residential Support Services payments reflected legitimate, if informally structured, care coordination consulting he had personally provided, that the inflated therapy invoices reflected a good faith attempt to build reserve funding for Marcus's future needs rather than theft, and that the Palm Desert property, while technically funded in part through trust distributions, had always been intended, eventually, to serve as a potential future respite care location for Marcus, an explanation Camille characterized, in a filing responding to Gerald's claims, as a post hoc justification entirely unsupported by any contemporaneous documentation, and flatly contradicted by the property's sole titling in Mr. Fitch's individual name with no trust interest recorded whatsoever. Then proceed immediately to a full civil trial. Gerald's attorney requested mediation, the session referenced in this story's cold open, held roughly 11 months after I first noticed the small, easily dismissed inconsistency about Marcus's group home fees. I want to describe what it felt like, sitting across that mediation table from Gerald, a man I had known for over a decade, who had been at holiday dinners, at Marcus's birthday celebrations, who had, in his own strange, ultimately hollow way, presented himself for years as someone genuinely invested in my brother's well-being. He looked smaller than I remembered him, across that table, and I understood, watching him, that some significant portion of the confidence and warmth I'd always associated with Gerald had been, in retrospect, a kind of performance, not necessarily insincere in every interaction, but clearly capable of coexisting, for 6 full years, alongside a systematic pattern of theft from a man who trusted him completely and had no capacity to protect himself from it. Camille laid out Daniel's forensic findings, one category at a time, sliding the 41 falsified invoices across the table. The Cornerstone Residential Support Services Shell Company documentation, the inflated therapy practice billing records, the Palm Desert property title history, while Gerald's attorney's expression shifted over the course of that presentation, from practiced neutrality to something considerably more strained. Gerald's attorney requested a private caucus roughly 90 minutes into the mediation. When they returned, their posture had changed considerably. The mediated settlement, ultimately reached after a full day of negotiation, required Gerald to repay $580,000 to the trust. Not the full $670,000 Daniel's forensic accounting had identified as misappropriated, but a negotiated figure reflecting Gerald's genuine, documented ability to pay given his actual assets, including the forced sale of the Palm Desert property, with the proceeds directed entirely to the trust, and a structured payment plan for the remaining balance secured against Gerald's future earnings and retirement accounts. I want to be honest that I initially resisted any settlement figure below the full $670,000, feeling, in the raw anger of that period, that anything less represented an unacceptable partial victory for a man who had stolen from my disabled brother. Camille, patiently and I think correctly, walked me through the practical calculus. A full trial, while it might theoretically result in a larger judgment on paper, carried real risk of delay, of Gerald successfully sheltering or dissipating assets during a prolonged legal fight, and of Marcus's actual, present financial security remaining unresolved for years while the litigation played out. The negotiated settlement, by contrast, secured $580,000 back into Marcus's trust within a defined, relatively short timeline, providing immediate, concrete protection rather than a theoretically larger but practically uncertain future recovery. This isn't about giving Gerald less than he deserves, Camille told me. During a break in the mediation, it's about getting Marcus the most real, reliable protection in the shortest possible time. Sometimes those two goals point toward different numbers, and I think in this case they do. I agreed to the settlement. Gerald also agreed, as part of the settlement's terms, to a formal restitution acknowledgement that Camille could, if necessary, use to support a separate referral to the San Diego County District Attorney's Elder and Dependent Adult Abuse Unit, since financial exploitation of a person with a disability, particularly one who lacks the capacity to independently manage or monitor his own finances, falls under California's Dependent Adult Financial Abuse statutes. Carrying potential criminal liability separate from the civil resolution we had just reached, the San Diego County District Attorney's Office, after reviewing the case Camille and Daniel had assembled, ultimately filed criminal charges against Gerald under California's Dependent Adult Financial Abuse statute, a charge that carries potential felony liability given the amount involved and the documented, sustained pattern of the conduct. Gerald's criminal case proceeded separately from the civil settlement and, as of the recording of this video, resulted in a plea agreement. Gerald pleaded no contest to felony financial elder and dependent adult abuse, receiving a sentence that included a period of incarceration, formal probation, and a court order reinforcing the restitution obligations already established through the civil settlement. I want to be honest about my own complicated feelings regarding the criminal sentence, which some viewers of this channel, based on comments on prior stories, might find lighter than they'd want given the scale and duration of what Gerald did. I understand that reaction, and some part of me shares it. But I've also come to understand, through this entire process, that the criminal justice system's treatment of financial exploitation against dependent adults, while improving in recent years as awareness of this specific category of abuse has grown, still often results in outcomes that feel, to families who have lived through it, disproportionately modest relative to the actual harm inflicted. What mattered most to me, ultimately, wasn't the length of Gerald's sentence, but the fact that his conduct was formally, legally recognized as exactly what it was, a crime against a vulnerable person, not a private family financial disagreement, and that Marcus's trust was restored to a level that would genuinely secure his care for the remainder of his life. Working with the new professional trustee and Camille, We rebuilt the trust's governance structure specifically to prevent anything resembling this kind of fraud from ever happening again. The trust now requires dual authorization for any distribution above a modest threshold, with both the professional trustee and, in an advisory capacity Camille helped establish, myself as Marcus's sister and closest family advocate, required to review and approve larger expenditures. Annual accountings are now automatically shared, not just with the court but with me directly, without requiring a formal request. Any new care provider or service arrangement requires independent verification of the provider's legitimate licensing and a direct confirmation from Marcus's actual, established care team. His group home, his primary physician, his established therapy providers, rather than relying solely on invoices submitted by whoever happens to be managing the trust's day-to-day paperwork. I share these structural details because I think they matter enormously for anyone watching this who has, or anticipates having, responsibility for a special needs trust, protecting a family member who cannot independently monitor their own finances. The specific vulnerability that made Gerald's 6-year fraud possible wasn't primarily a flaw in the trust's original design. My father's original special needs planning attorney had structured the trust soundly. It was the gradual, informal drift of unaccountable day-to-day authority into the hands of one person, without the kind of built-in, structural oversight that makes fraud considerably harder to sustain over any meaningful length of time. Marcus knew, throughout this entire process, that something serious was happening, that Gerald was no longer going to be part of our family, that there had been money problems I explained to him in the plainest, most age-appropriate language I could manage, careful never to minimize what had happened, but equally careful not to overwhelm him with details he genuinely couldn't process, or that would serve no purpose beyond causing him unnecessary distress. About a year after the settlement, sitting together at his favorite diner near his group home, Marcus asked me a question that has stayed with me since, in the specific, direct way he asks the questions that matter most to him. Gerald stealing from me because he thought I wouldn't notice. I sat with that question for a long moment before answering, wanting to give him something true without giving him something that would make him feel smaller or more vulnerable than he already, understandably, might have felt in that moment. I think he thought you couldn't check on him the way I could, I told him. And I think he was counting on that. But you know what, Marcus? You didn't have to be the one to check. That's part of what family does for each other. I get to be the one who checks, so you get to just focus on your job and your friends and the things you actually enjoy. That's not a weakness. That's just how a family that loves you is supposed to work. Marcus thought about that for a moment in his careful, deliberate way. Okay, he finally said. But you'll always check, even when I'm old like Mom. Always, I told him. For as long as I'm here, and after that, we're going to make sure there's always someone whose whole job is checking, so you never have to worry about it. My mother's relationship with both Marcus and me has changed, in the years since, in ways I want to describe honestly, because I think it reflects a genuine, if difficult, process of repair rather than a simple, clean resolution. She has struggled, considerably, with guilt, not the guilt of active participation in Gerald's fraud, which every piece of evidence Daniel and Camille assembled consistently supported her genuine lack of knowledge of, but a different, harder kind of guilt about the years of exhausted, grief-driven avoidance that allowed her to hand over responsibility she should have maintained more actively, even when doing so felt at the time like an act of reasonable trust in a partner rather than a dereliction of her responsibility to her own son. She sees a therapist regularly now, something she'd resisted for years before this entire ordeal, and has become, somewhat to my surprise, deeply engaged in Marcus's care in a way that feels different, more present, than it did even before Gerald entered our lives. as though the specific, painful clarity of nearly losing so much of what our father built for Marcus has reawakened, in her, a kind of vigilance and presence that grief and exhaustion had, for years, quietly dulled. I will never again let myself believe that loving someone means not having to actively pay attention, she told me once, sitting in Marcus's group home's small visiting garden, watching him show her, with real pride, a small vegetable patch he'd helped plant that spring. I thought handing the details to Gerald was a form of trust. I understand now that real trust, when it comes to protecting your child, still has to come with your own eyes open. Spent considerable time, in the years since this happened, learning about the specific, documented scale of financial exploitation targeting adults with disabilities and cognitive impairments. A category of abuse that, according to research I've reviewed since, is dramatically underreported, in part because the very cognitive limitations that make someone vulnerable to this kind of fraud also make it considerably harder for them to recognize, articulate, or report what's happening to them. I want to share some of the specific warning signs I wish I'd recognized sooner, because I think they're genuinely useful for any family member watching this who has a loved one with a disability whose finances are managed, formally or informally, by someone else. Vague, poorly itemized accountings, categories like enhanced services or supplemental support without specific, verifiable underlying documentation, are a significant red flag, even when they come from someone you trust completely. A sudden reluctance or delay in producing detailed financial records, especially when framed as your request being somehow hurtful or distrustful, deserves scrutiny rather than deference. Any service provider or care arrangement you cannot independently verify through the beneficiary's actual, established care team is worth investigating directly, rather than trusting solely on the word of whoever manages the trust's paperwork. And any pattern of one family member gradually, informally accumulating unaccountable financial authority, even a family member you trust deeply, even a family member who seems genuinely devoted to your loved one, deserves the kind of structural, ongoing oversight that makes sustained fraud considerably harder to maintain. I want to share something Daniel Whitcomb, the forensic accountant, told me during one of our final debriefing meetings, because it broadened my understanding of this entire ordeal in a way I hadn't expected. And I think it's important context for anyone watching this who assumes a story like mine must be a rare, unusual occurrence. This is my 9th case involving fraud against a special needs trust in the last 6 years, Daniel told me, closing his laptop after our final review session. Every single one follows some version of the same basic structure: a beneficiary who can't independently verify financial records, a family member, often a step-parent, sometimes a sibling, occasionally even a parent, who gradually accumulates unaccountable authority over the finances, and a pattern of vague documentation that only becomes visible once someone finally does the work of systematically reconstructing years of transactions against actual, verifiable need. I asked him what made cases like mine different from the ones that never get uncovered at all. Family members with the resources and the persistence to actually hire someone like me, he said plainly. That's it, honestly. That's the entire difference most of the time. I think about the cases I never get called for, where a family member notices something's off, gets told they're being paranoid or ungrateful, and doesn't have the money or the confidence to push further. Those cases don't disappear because the fraud wasn't happening. They disappear because nobody with the resources to prove it ever got involved. That conversation has stayed with me, in the years since, as one of the most sobering parts of this entire experience. The recognition that Marcus's protection, ultimately, depended not just on the strength of the evidence once we finally assembled it, but on my own capacity, as a nurse with a stable income, and the ability to take on a significant financial commitment to hire Camille and Daniel, to actually pursue that evidence in the first place. I think about families without that capacity, and about how many disabled and cognitively impaired adults across this country are, right now, being quietly exploited by people who understand, correctly, that their victims' families may simply lack the resources to ever prove it. I want to introduce someone I haven't fully described yet, because her role in this story, while smaller than Camille's or Daniel's, mattered enormously to how quickly and clearly we were able to establish the truth about Marcus's actual care. Yolanda Briggs has directed Marcus's group home for 11 years, longer than he's lived there, and has become, over that time, someone I trust almost as completely as I trust my own family when it comes to understanding Marcus's genuine day-to-day needs and the actual quality of care he receives. When Daniel's investigation first reached out to her, requesting documentation of exactly what services the facility provided and billed for over the 6-year period in question, she responded with an immediacy and thoroughness that, looking back, I think reflected her own quiet, long-standing unease about some of what she'd observed, without ever having the specific information needed to raise a formal concern. "I want to tell you something I probably should have mentioned to your mother years ago," Yolanda told me, once the investigation had progressed far enough that she felt comfortable speaking more openly. There were a few times over the years when Gerald would call the front office asking us to confirm, in writing, that Marcus had received certain additional services, specific dates, specific descriptions of enhanced care that didn't match anything in our actual internal records. I always told him honestly that I could only confirm what we'd actually provided, and he'd usually just thank me and drop it. I never put together, at the time, what those calls might actually mean. I just thought he was maybe confused about our billing or double-checking something for insurance purposes. I wish I'd asked more questions. I told Yolanda, as I've tried to tell everyone in this story who has expressed some version of retrospective guilt about not catching this sooner, that she had no reasonable way of knowing, at the time, what those calls actually represented. That Gerald's entire scheme depended precisely on nobody having enough isolated pieces of the puzzle to see the full picture until someone, eventually, deliberately assembled all of them together. Yolanda's records, once formally requested through Camille's investigation, became some of the most valuable documentation in the entire case. A clean, independently maintained account of exactly what care Marcus actually received, against which Daniel could definitively measure the gap between reality and what Gerald had billed the trust for. Something unexpected happened about a year after the settlement, once the criminal case against Gerald became a matter of local public record, and a regional television station ran a brief segment on financial exploitation of adults with disabilities, using our case, with my permission and Marcus's, as an anonymized example. I began receiving messages, through the hospital where I work, through a local disability advocacy organization I'd started volunteering with, through friends of friends, from other families who suspected, or in some cases had already confirmed, similar exploitation happening to their own disabled family members, reaching out to ask what steps we'd taken, which attorney we'd used, how we'd afforded a forensic accountant, what the process had actually looked like from the inside. I connected several of these families directly with Camille, and with a broader network of special needs, trust attorneys, and forensic accountants I'd come to know through this process. And I've watched, in the years since, at least 4 other families successfully uncover and address similar situations, informed in part by the roadmap our own difficult experience had inadvertently created. One of those families, a mother named Priscilla whose adult son with Down syndrome had been the victim of a strikingly similar fraud, perpetrated by an uncle who'd taken over managing his special needs trust, told me something that I've held on to since, in a conversation over coffee about 18 months after her own case resolved. I almost didn't pursue it, she told me. I kept thinking, what if I'm wrong? What if I destroy my relationship with my brother-in-law over a misunderstanding? And then I read about your case, and I thought if she was wrong, the worst outcome was an uncomfortable conversation and an accountant's bill. If she was right, and she didn't pursue it, her brother would have lost everything his father worked to protect for him. That math made the decision for me. I think about that conversation often. The way one family's difficult, expensive fight to protect a vulnerable brother rippled outward, quietly, into other families' willingness to trust their own uneasy instincts rather than talk themselves out of investigating something that felt wrong. I want to be honest about something before I close this story, because I think the stories on this channel sometimes present a cleaner emotional arc than real life actually offers, and I don't want to do that disservice to anyone watching this who might be in the middle of their own similarly difficult fight. There are still hard days. Days when I look at Marcus's current trust balance, meaningfully restored, genuinely secure for his lifetime, but still, mathematically, $90,000 short of what a full, uncontested recovery would have provided, and feel a flash of the same raw anger I felt sitting across that mediation table from Gerald. Days when Marcus asks an innocent, well-meaning question about Gerald, or mentions missing some small, ordinary routine the two of them used to share before any of us understood what Gerald had actually been doing. And I have to sit with the complicated, unresolved grief of loving someone who is also capable of causing this much harm. What helps, on those days, isn't pretending the anger or the grief isn't there. It's remembering, specifically and concretely. The version of this story that very easily could have happened instead. The version where I let that first small comment about group home fees go unquestioned. Where I accepted Gerald's deflection about hurtful distrust and backed away from requesting the accounting, where Marcus's trust simply continued draining, year after year, until there was nothing left at all for a man who will need supplemental support for the rest of his natural life. That version of this story was entirely possible. It required nothing more than my own reasonable, understandable exhaustion, or self-doubt, or unwillingness to risk an uncomfortable confrontation with a man I'd known for over a decade. The version that actually happened required something harder. 11 months of investigation, $580,000 recovered instead of the full amount, a fractured relationship with a man who had been part of my family, and a mother who had to confront, publicly and painfully, her own years of insufficiently examined trust. I would make that trade again, every single time, without hesitation. But I want to be honest that it was a trade, not a clean, costless victory, and I think that honesty matters, both for my own ongoing healing and for anyone watching this who might need to hear that the hard version of doing the right thing is still, unequivocally, worth doing. I want to end this story somewhere specific, somewhere small and quiet, rather than with another courtroom or another confrontation, because I think it's the truest measure of what this entire fight was actually for. That small vegetable patch I mentioned earlier, the one Marcus helped plant in his group home's visiting garden, has become, over the 2 years since the settlement, something close to Marcus's proudest ongoing project. He tends it most weekends, has learned, through the group home's small horticultural therapy program, the specific rhythms of what needs watering and when, which plants are ready to harvest and which need more time. He brought me a tomato from that garden on my last visit, handing it over with the same careful, deliberate pride he brings to everything that matters to him, and told me, with real seriousness, that he'd grown it all by myself mostly. I thought, holding that tomato, about the specific, almost absurd contrast between this small, ordinary moment of pride and everything it had taken to protect the financial foundation that makes Marcus's entire stable, dignified life at that group home possible in the first place. The forensic accountant, the falsified invoices, the mediation table, the criminal referral, the 11 months of investigation that began with nothing more than an oddly worded comment about a fee increase. Marcus doesn't know, in any detailed sense, about most of what it took to get here. He knows Gerald isn't part of our family anymore, and he knows, in the plain terms I've tried to always give him, that Gerald did something wrong with money that was supposed to be his. He doesn't know the specific dollar figures, the shell company, the Palm Desert property, the mediation table. He doesn't need to know all of that. What he needs, and what he has, is a group home he's proud to live in, a job he genuinely enjoys, a small garden that's entirely his, and a family that checks, quietly and consistently, to make sure the foundation underneath all of that ordinary, dignified life remains exactly as protected as our father always intended it to be. That tomato, more than any settlement figure or criminal plea agreement, is what this entire fight was actually for. Epilogue for every sibling, every parent, every protector of someone who can't protect themselves. As if you're watching this, and you have a family member with a disability, a cognitive impairment, or any condition that limits their ability to independently monitor their own finances. I want to say something directly to you, informed by everything this fight taught my family the hard way. The person you love deserves more than trust in whoever happens to be managing their money. They deserve structural, ongoing oversight, regular, detailed accountings that someone independent actually reads closely. Verification of care providers through the beneficiary's own established support network, rather than solely through whoever submits the invoices. And a genuine, sustained willingness to ask uncomfortable questions of the people managing that money, even when those people are family, even when those questions feel, in the moment, like an accusation you'd rather not have to make. My brother Marcus will never be able to read a bank statement, will never independently notice if someone quietly begins taking what belongs to him. That is not a weakness in Marcus. It is simply a fact about the specific care he needs from the people who love him. The same way he needs help managing certain daily tasks, he needs help ensuring that the financial protections our father carefully built for him actually remain protections, rather than a quiet, unmonitored opportunity for someone to exploit. I check now. Regularly, closely, without apology to anyone who might find that scrutiny uncomfortable. And I will keep checking, for as long as I'm able, because I learned, in the most painful way possible, exactly what happens when a family assumes that love alone is sufficient protection, without the structural vigilance that real protection actually requires. My name is Diana Aucaffer, and this has been another family hidden fight. If this story reminded you of someone you love who deserves this kind of protection, share it with your family today, and tell us your own story in the comments. It might become a future episode. Subscribe for a new family hidden fight story every week, and we'll see you in the next one.